Hello, I'm Martin Lewis, and this is your personal loan mini briefing. Now, before I start, let me be plain. Loans are a form of debt. You do not want debt unless you really need it. So please make sure any borrowing you're doing is planned, it's one-off, it's budgeted that you can afford it, you minimise the amount that you borrow, you repay it as quickly as you possibly can. If you can't do that, then don't borrow. Also, a loan may not be right for you. If you're trying to cut the cost of credit card debt, for example, you might be better off with a 0% balance transfer card where you shift the debt onto a credit card so it's now at 0% because there are no 0% loans, so that's cheaper, although a loan might give you a lower payment. And that's basically the point of a loan. The real key difference between a loan and a credit card is a loan has a structured repayment. You will repay a fixed amount off each month for a set time and then the loan will be gone. Whereas with a credit card, well, you can borrow more and then pay it back and you just have a minimum repayment that you have to pay. You can with loans these days, you should be able to repay it off more quickly if you want to, but there can be small penalties for doing that you need to watch for. Of course, when you're getting a loan, you want the lowest interest rate possible for the amount that you're borrowing. Our eligibility calculator will help you with that, but there's also our full cheap loan guides, which tell you every day what the cheapest loans for each amount are, where you can check out both the right and wrong ways to borrow and also see what the best buys are. Now, when I'm talking about personal loans, I'm talking specifically about unsecured personal loans. Now, unsecured doesn't sound that good, but it is actually better for you than secured, because what secured means the lender, not you, gets the security that it can take your house if you don't repay. A mortgage is a classic example. And the personal loans we're talking about are unsecured, so it can't take your house, or at least it's a lot more difficult for it to do so. The big question with loans isn't just should you get one, and if you shouldn't get one, don't get one. It's also, will they give you a loan? And this is where our eligibility calculator comes in. With that, you put your details in, and it will tell you how likely you are to be accepted for most of the top loans out there. There is one factor I wanted to explain here. Now, when you do eligibility for a credit card, your credit score, each lender scores you based on its own wish list of what is a profitable customer. Your credit score is pretty important. It decides whether you're accepted or not. And then they do an affordability score that is the big factor of how much your credit limit will be. Remember though, with a personal loan, you are applying for a specific amount. So you've got your credit score and your affordability score. How much you'll get is often based on the affordability score. Well, think about it. A simple measure of that is how much you earn. Therefore, you could be applying with one lender and you look like you will be accepted if you were trying to borrow £2,000 off it, but you could have a very low score if you're trying to borrow £10,000 off it. So do have a think when you're using the eligibility calculator how much you need to borrow. The less you borrow, the better your chance of being accepted. The next factor you have to look at here is the loan pricing, and I'm afraid pretty much all loans are representative APR. And that word representative is not a good one for us, because what that means is only 51% of accepted applicants need to get the advertised loan rate. So if a loan is advertised at 9.9%, 51% of people accepted need to get 9.9. The rest can be charged more without limit. So you might find you apply and it's 18% you're being offered. You then don't want that, but you've got a mark on your credit file. It's very difficult to get around that. We do in our eligibility calculator have a few guaranteed loan rates where you'll know what rate you get if you do apply, but unfortunately it's a problem I've been campaigning on for years. You need to be aware of it. A couple of more quick tips on this. If you're borrowing a very small amount, a loan may not be right for you. You may well be better off on a credit card using what's called a money transfer credit card. It's complicated. It's where the credit card pays money into your bank account for you. You need to do reading on it, but that can be cheaper than a small loan for roughly under, say, around £3,000. Also read the money transfer loans article. And finally, if you're getting a loan or thinking of a loan because you've got debt problems, this may be the wrong route for you. You may well be far better off, and I would encourage you to check out non-profit debt help agencies like National Debt Line, Citizens Advice Bureau or Step Change. Talk to them. They have other solutions that you can't do yourself. They can negotiate with your creditors. And if you're doing this because you're feeling you can't breathe because of your debts right now, then please don't get a loan. Go get yourself some debt help. And if you want to know more about debt help, there's a full article on that too, as well as the loans guide on Money Saving Expert.